So far, we went through all the separate formations which I watch when I do my price action analysis, and now I'll do a little recap. So first, we went into rotation or sideways price action, which is very important because institutions accumulate their positions there. This is how it looks like, simple rotation. Nothing really difficult about identifying this one. Then we went through trend. This is a trend, uptrend or downtrend. Institutions who accumulated their positions in rotation make money when there is a trend. Alright? So they initiate the trend after the rotations. Then we covered strong rejections of either higher or lower prices. Strong rejection is a sign of strong and aggressive sellers rejecting higher prices, as in this case, or in this case, this strong rejection is a sign of aggressive buyers rejecting lower prices and pushing the price upwards aggressively. Then we went into this simple setup, which says that support becomes resistance and vice versa. And this one deals with a strong rejection. So if there is, for example, strong rejection of lower prices like this, then the price goes past it, then this level, which got hit twice and worked as a support, becomes a resistance, and you should expect a reaction like that. Alright, so this is the support becoming a resistance setup. Also it works as a resistance, which becomes support. So if there is some strong price level which works as a resistance, then the price goes past it, then the resistance becomes a support, and we expect a reaction like this from the level. Alright, so that's for this setup. Then we went into weak highs and weak lows. Weak highs and weak lows are basically the opposite of the strong rejection. So when a strong rejection of higher prices looks like this, then weak rejection of higher prices looks like this. Strong rejection of lower prices would be this, and weak rejection would look, for example, like this. Alright, no sign of any aggressivity. After that, we went into failed auction, and the logic behind this is very similar to the weak high and low. It's connected. Failed auction simply means that the auction ended sooner than it should, and basically the price wasn't able to create a proper low or a proper high. And failed auction could look, for example, like that. When you have, for example, a low and two candles which are on the low, on the swing low, and at the same price level, alright? Those two candles, those two wicks, and at the same price level. So this is a failed auction. Alright, so we went through all those things more or less separately, but when you are doing your price action analysis, you need to look at all those at the same time. You need to watch for all those sort of price action patterns all of the time, and you should be able to see them in a chart sort of naturally or quickly. Alright, so basically you need to learn how to read the chart. In the start it may not be that simple, but as you gain more experience, as you do it more often, then it will feel pretty natural to you, and you wouldn't really need to think about it that much. So with more practice it will be easier and easier. Alright, so that's a little summary, and let's now go into the charts, and I'll show you the complete picture of how you should analyze the price from the price action point of view.